Hey everybody, this is Dan French with Mutual of Omaha Mortgage. Wanted to give you a quick update on the housing market, also interest rate trending, a little bit of information on taxes. I'm not a CPA, but I got some bullet points to go over you when I spoke to a CPA about some of the changes that's going on, especially for this year. It's tax season, so let's talk about it. You know, you look at what rates did this week, 4.35%. That's phenomenal. We're declining every month since really November of last year. And I think a lot of things that were going on last year put people on the sidelines. You had rising prices on homes, rates were going up, man, it was terrible. And so when you see this news, it's great because prices are coming down, rates are coming down, and so now home affordability, sustainability, payments are low. Everybody's getting back in the market. I think everybody was kind of waiting to see what happens the following year, 2019. And I'm going to tell you, we've seen a nice uptick. A lot of people out in the market, a lot of activity. I want to show you this quick graph real quick, guys. This graph shows a lot. This graph has a nice decline. You see this right here? This is great. I mean, you look at rates from middle of November all the way down till now, just coming down. We were almost at 5% back in the middle of November. And I'm just telling you, people out there that are looking to buy a home right now, they're back in the market. You got people out there looking to refinance. I'm doing one right now for a lady, debt consolidation. She's refinancing about $60,000 in trade line debt, and she's replacing it with a lower mortgage. So it's out there. If you guys have questions, call me. Right now, rate and term, maybe it's not as much savings as some would want. But, if you guys are in these higher rates because maybe your credit was bad, you're at the 5.5 percentile, and you guys had maybe your credit score increased, now's the time to take advantage of the market. So when you look at what's going on with rates and you look at what's going on in the housing market, it's phenomenal news. Fed Powell came out and talked about, inflation being low, that they're not going to raise rates. When they talk about raising rates, that's a short-term instrument like a car loan or a student loan or, one of those short-term instruments. It's not like a mortgage. So what that does is it really maybe puts consumer confidence at an all-time high when they're not raising those rates. And right now we see consumer confidence levels really leveling off, but really obviously a high level. And so consumer confidence is there. That's a big part of what happens where people go out and buy homes. Do they feel confident about the economy? I think the economy slowed a little bit, but I think overall it's still thriving, and I think home affordability is there. And guys, now's a really good time to buy a home. You look at some of the housing news. Let's talk about that. The housing news that came out, we had existing home sales down 6% in December. We had rates increasing all the way up until November. And everybody was like, why is this happening? Why, I don't think I'm going to buy, I'm going to stay renting. And I don't blame you. Last year was one of the weakest years we had since 2015. So when you look at all this information coming out, I think everybody was like, I need to sit on the sidelines, find out what's going to happen in 2019. And I think with the rates coming down, with the prices here, especially in Las Vegas, starting to come down or come to a natural correction, there's more properties in the market. It's really a nice growth, and it's really a nice market to buy a home. When you look at some of this news that came out, a lot of the news was delayed. We talked about that. We had that government shutdown where 800,000 employees were going, and they didn't really have a place to go work. So, some of this data is coming out just now, but it doesn't make any impact on what's happening now. I think rates are going to stay really nice, right around the same 4.5%, maybe increase a little bit, come down a little bit, but it's going to be hovering right around 4.5% all the way through spring into summer, which is great news. Everybody wants to start moving when the weather's a little bit hotter and everything starts to sunshine. When you look at taxes right now, everybody knows it's tax season, and a lot of people that I talk to are getting less money back, and I'm one of them. You used to be able to write off 2106 business expenses. I'm a commission employee, W-2'd employee, but I can't write off income that I market, my marketing expenses, or, for instance, I was on the radio at one point. I can't write that off. There's a lot of stuff that you can't write off now that I used to be able to write off, and it's putting me in a higher tax bracket, and obviously I'm paying more taxes. And you look at what the government did. The government did lower taxes, but it really, guys, you're not going to like this. It helped Corporations went from 35 to 36 down to 21%. That's the biggest decrease that we saw. They did help a little bit with S corporations and sole proprietor or business owners, partnerships. It did help a little bit by them giving them an additional 20% write-off on some of the stuff that they can write off. But I know it's a lot of it is not going to be helping the average business owner out there because it's very limited. If you had kids, you might get a little bit more money back from there. So maybe you can gain some of that back. But I do know that overall people are getting a little bit more back throughout the year, but a lot less on their tax returns. So when you're looking at, well, I'm going to use this money to buy a home, down payment, closing costs, or repositioning myself in life, you guys might not get as much back. And it's unfortunate. It's probably important that you contact the CPA or somebody to answer these questions. Also, property taxes. Property taxes, the amount that you could write off, has a cap. You can only take up to $10,000 in property taxes. That's not good news for anybody outside, like on the East Coast or the West Coast, that pay a higher tax on their property taxes. So that could push them with that income or that write-off. That might push them into a higher tax bracket, which ultimately they'll be paying more taxes. I mean, it was already tough as it was before. I've seen some of the numbers with these properties that some of these people were paying on taxes, but now it's really hard, guys, to really look at the numbers and see if it makes sense to own a home. So if you guys have any questions, do reach out to me. Like I said, I'm not a CPA, but I do have a lot of information from my CPA. If you guys have any questions, financing or real estate related, leave a comment below in the box or email me a question at dfrench@mutualmortgage.com. You can contact me 702-332-3532. You guys have a good rest of your day.